Joining us now to talk more about banks and the broader market is Unlimited co-founder and CEO Bob Elliott. I'm getting used to Friday Bob. I like having you here. It's usually rainy here as well. We got to fix that.
Today.
It is. So Leslie mentioned we're at these lows on the KRE since May. We're also, I think, at a low for the NASDAQ since May. What to make of all that?
Well, I think when you look at the banks, we are starting to see some concerns that are emerging, not so much for the big banks, not so much for the small banks, but sort of those regionals stuck in the middle are starting to see some pressure. They still have a little too much duration on their balance sheet. They're still seeing, obviously, some hits as a result of the bond sell-off. These are the sorts of things that are not quite big enough to be a big deal to the Fed to cause them to pause or hesitate in terms of keeping monetary policy tight as it is. But it is enough to obviously scare shareholders in terms of what the forward-looking picture looks like.
Okay, so bigger picture, your position, I think, still is that we're late cycle, a recession is coming. That's different from what Atlanta Fed President Raphael Bostic said on Squawk Box this morning. He said no recession coming. You still expect a recession? Do you have any perspective on how deep and how soon?
Well, I think one of the things that, of course, the Fed's not going to sit there and tell you that a recession is coming relatively quickly, particularly when they're holding tight monetary policy in place. But it's the sort of thing where just as everyone is sort of giving up on this recession because it's come, much later than most people have expected, the storm clouds are gathering, right? You've got the backup in bond yields. That move is directly hitting incremental borrowing and the vast majority of borrowers. You've got, frankly, the fact that we've had a longer and longer term of elevated bond yields, which means that those who have hesitated to borrow are now starting to run down their cash piles and now starting to face a need for increased borrowing ahead. And the fact that you're starting to see weakening in various more cyclical sectors of the economy. Housing had popped and now is rolling over. Employment, here and there is getting weaker and weaker. And so the odds that we get out of this without having a meaningful slowdown in economic activity are pretty unlikely.